And good afternoon. This is Mary Ellen McGonagle, and welcome. You are watching the MEM Edge Show, brought to you each Friday afternoon at 5 p.m. Eastern Time. And I do want to say this is the show where we put you in front of where the action is in the broader markets. And it's all with an eye toward helping you develop a solid trading plan as you go into next week. So we have super lots to cover. Let's go ahead and get started. We are going to go ahead and begin as usual by taking a really close look at where the current markets are. You want to make sure that the markets are in a healthy position, of course, before you put your money to work. And then from there, of course, we are going to go ahead and dig in, take a look at some sector and group rotation that is continuing to take place. You want to take advantage of that as money flows into these newer areas. And of course, a lot of that is going to be earnings driven. We're in a really hot earnings season. And then also playing the move into biotechs and small cap stocks. Small caps didn't do terrifically well this week, but we are seeing pockets of strength within there. So I'll show you some tips and tricks of how to get in front of the names that are going to be best positioned to benefit from that move into these areas. We do certainly still have some stocks that are due to companies that are due to report their earnings next week. So we'll take a look at some of the larger cap names. And this is with, of course, you want to pay attention to how these larger companies present and report their earnings. And that does tend to have an impact on other stocks within their given group, as well as the broader markets. So I'll highlight for you some of the names that are due to report. And then failed breakouts, and by that I mean stocks that break out to new highs and then falter. We are seeing a little bit of that action, and I'm going to give you some samples and what you should be on the lookout for with these stocks that fail to break out relative to other stocks that are charging to new highs. So a lot there. Let's go ahead and get started. First, of course, as usual, I am going to begin by showing you this daily chart of the S&P 500. So each bar on here is 1 day of trading activity. And I did want to point out to you that with this week's 1.5% price improvement in the S&P 500, we did reach another new high in price, which is fantastic because, as you can see, taking us back to this August period, we had a lengthy 3-month period of pretty much go nowhere, but even more importantly, we had these two sharp pullbacks, and a new high could be just what the doctor ordered to help propel this market higher. We're also going to, hopefully we can get to this, but seasonality. I want to share with you some areas of the market that do tend to do better in November. Just as an overall hint, November is generally very, very generous to the markets, and it is a bullish period. But within that, we're going to want to take a look at some of the underlying sectors and how they tend to do during this year-end period. But back to the S&P 500, we can see that in this healthy phase that we have been in over this last 3-week period, the markets are finding what I call support at this upward trending green line. That's your 10-day simple moving average, quite simply a smoothed out version of the last 10 days trading activity. So as this market is continuing to move higher, it is finding support. You can see it'll pull back and then rally right up above it. So quite bullish action relative to these simple moving averages. Let's take a look up here at this RSI, Relative Strength Indicator. We can see it's trending upward, and it's also above this neutral 50. So we are in good standing there. Down below, I have a moving average. Convergence, Divergence, MACD is the more common name, and this is going to alert you to shifts in momentum. So if we go back here, for instance, to this end of September period, this black MACD line crossed down below this red signal. That was indicating that this uptrend in the beginning of September, the momentum shifted downward. And then here more recently, we can see midway through October, we did get that reversal where this black line went up through the red in a positive fashion, telling us that this near-term downtrend had the momentum shifted into positive territory. So we are in good standing, certainly with each of these various indicators and the simple moving averages. Now let's go ahead and drill down even further because we want to know what else is going on in the markets. This is the S&P. How about some of those other indices and also some of the bigger ETFs? And by that, I mean certainly the more relevant and important ETFs. So what I've done here, this is the candle glance view. You can access this on the first page of StockCharts.com. It's giving us a 2-month view. I've populated this up here as far as the various ticker symbols. We have the Dow Jones Industrial Average, the NASDAQ, the Russell, the IBB, that is the NASDAQ Biotech, really on fire. Transports, semiconductors, and so forth. Gone ahead and added an RSI. That's that relative strength indicator. I sorted it by descending. So we are looking at these various indices, strength to weakness, and take a look. This is definitely new to the markets. IBB is that biotech iShare, and it is up over 4% for the week. And that is really solid good news. There are several factors that are driving that, and certainly one of them is the fact that some of these larger cap, Biogen comes to mind, Amgen, some of these larger biotechs are firming up, but we are seeing movement beneath the surface, and this is really quite bullish. Biotech stocks are generally very, very risky. A lot of these companies, certainly the smaller ones, are not going to have earnings in place. They're still in discovery clinical trial phases. And for the markets, for investors to invest in these biotechs, which are a bit riskier. Let's take a look at a longer term chart. And this is a move that I've been highlighting over the last couple of weeks because you want to see a move into these riskier assets. And that is telling you that investors have confidence in the markets. And this confidence is going to help buoy the markets further. So let's go. We are back now taking a look at these various candle glance. Let me get us back to where we were so that we can capture more in the way of where the strength is. We talked about biotechs. Let's move on down the line here. Semiconductors. This is another very vibrant and critical area to the broader markets. A lot of these semiconductors are providing chips that are promoting and helping with really profit margins in every industry, because now there is an ability for these companies to process information faster, to create robotics that can help industrials. So really every area of the market is going to need these semiconductors. The fact that this area is rallying, it's up 2.6% for the week, and we can see it's really quite constructive. This is another bullish sign for the markets. We of course have here the Dow Jones Industrial. Now this is that move into small cap stocks that I mentioned to you. Now this week, not as vibrant as biotech, but another riskier area, and you'd like to see an upward move into these types of stocks. So as we go down into these weaker areas, we can see gold. This certainly is a safe haven area, generally performs well when the broader markets are shaky. This is faltering a bit, and we can see transports had a good week and so on. This is the Volatility Index, better known as the Fear Index. We like to see this in a downtrend, and it's trading down here around this 12 area. So that is another good sign for the broader markets. Now, let's go ahead and proceed, take a look at some of these ETFs and how they're performing, certainly relative to each other. So I have each of the 11 S&P sector ETFs populated here. And then also we have the S&P. You want to see relative to the S&P 500, which areas are outperforming. So we can see the S&P is squarely up here in the forefront, but there are 3 areas that are outperforming the S&P, and you really want to be alerted and aware of this, because these are generally the areas, if you are putting new money to work, they can be very vibrant and wonderful areas to look at. Also, financials, industrials, these are cyclical, and they are areas that do tend to perform well in the latter periods of an economic cycle. So it makes sense that they are doing well. Healthcare, a lot of dynamics going on here. This is all going to be earnings related going into this week. Healthcare was one of the worst performers year to date, so it is nice to see a pickup. Of course, a lot of that is going to be biotech stocks. So then as we drill down, again, RSI is the overlay here. We can get into some of these weaker areas, and what you'll see is the defensive areas are faltering a bit. This is the real estate and utility, your higher yielding areas, as well as staples. But I will argue there are pockets of strength within here, and I know that because with my MEM investment research bi-weekly newsletter, I am alerting those subscribers not only to where the strength is, but also within those sectors. And there are clear-cut pockets of strength that are number of stocks, or a few of them, on our suggested holdings list that are really outperforming the broader markets. So despite the overall sector languishing, again, there are pockets of strength within those particular areas. So let's go ahead, because I talked about some of the items that I did want to go ahead and cover, but actually we are going to take a very brief break here. When we get back, I'm going to share with you some characteristics within small caps, how you can capitalize and get in front of some of the names that are in there. So let's go ahead and take a brief break, and we will be right back.
Today's market volatility provides savvy traders and active investors with an abundance of profitable opportunities. At the Traders Expo Las Vegas, November 7th through 9th, over 75 of the most respected traders in the world, including Dennis Gartman, Tom Sosnoff, Todd Gordon, and Tom DeMark, will explain how they're adapting their strategies and share the specific trading opportunities they've identified in equities, options, forex, futures, cryptocurrencies, and more. Claim your free pass to join them at tradersexpo.com.
And welcome back. I did want to begin this segment by taking a quick look at the small cap area of the broader markets, just share some insights with you so that if you are going to delve into this area, you'll have some knowledge, certainly about the Russell 2000. This is the primary index that has 2,000 stocks within it that are smaller cap. So when we talk about small cap stocks doing well, this is the index that we're going to use as a proxy to tell us about that. So I'm going to share with you just some insights as to the holdings and how this particular index is broken down, so you can have a sense when you see small caps outperforming where the driving or where the impact may be coming from. So let's take a look within the Russell 2000, how the exposure is and what the breakdown is. And the first thing you'll notice is financials. 18% of this small cap index is financial stocks. I'll tell you, a lot of it is these smaller banking stocks. And we are seeing a move, a positive move into a number of these financials. Healthcare is the next. This will be a number of those biotech names, industrials, and so forth. So as we drill down, you'll see we get into some of these smaller areas. But the primary drivers within this small cap index is going to be financials and healthcare and industrials. And then from there, we certainly are represented elsewhere as well. So this is going to be helpful as we go into the StockCharts.com, and I'm going to show you a quick way that you can get in front of some of these small cap names. And I've already gone ahead and what you can do from that first page in StockCharts on StockCharts.com is go ahead into what is called the Scooter reports. This is the StockCharts technical rating, and you want to take a look at this report because it's beautifully broken down. Large caps, small, mid, even ETFs. And the higher that scooter or StockCharts technical rating is, the higher the number, up to 99.9, the more technically sound that stock is. So it can really be a quite quick and useful way to get in front of stocks, certainly that are attractive from a technical standpoint. So what I've done here is gone ahead and we are looking now at small cap stocks sorted by strength. And you can see here are a number of those biotech stocks. I talked about that being a heavy weighting. And then we do see some financials. Now, when you are looking at this scooter ranking report, a lot of these that are at 99.9 will be certainly extended. We can just go ahead and hover over the ticker symbol and you'll see that a number of these stocks up here in the forefront have already had significant moves. I'll just show you a quick example. Doesn't mean that their uptrends are not still firmly in place. This is KOD, a healthcare stock, and it actually is a biotech company, and we can see it's continuing to find support at this upward trending 10-day. So it is very much in an uptrend, but you may want to drill down a bit further so that you can take a look at potential candidates that are not so advanced in their particular move. And again, we do want to focus on those areas that are up there in the forefront: industrials, healthcare. We talked about these areas being very vibrant right now. A number of these smaller biotechs, unfortunately, are not going to have earnings. So the KOD I just showed you, they are negative all the way. They are still in trial phase. So some of you may want to focus on other areas rather than some of these smaller biotechs. So we can certainly drill down. And what I would do is take a look at some of these areas that have scooter ratings, maybe in that low 90 area. Here is a stock, as a matter of fact, TTGT. I did write an article last weekend that highlighted the move into not only small cap stocks, but into technology. Tech stocks hit a new high last week. So I highlighted 3 stocks within tech and small caps that were looking very attractive. This was one of them, TTGT. I believe it's up about 3.3% for the week. What we are seeing here is a continued formation of that saucer type pattern. You can go back to StockCharts under articles, take a look at that article, and you will see other stocks that were highlighted. But what I'm showing you here is that really nice saucer type formation. The stock is at about 24 3/4, very close at about 25. It will break out to new highs. We're getting other positive signals for that stock. So you can see if you drill down within that scooter, you do have that capability to get stocks that are a little bit earlier, again, in their potential advance. So that's a way that you can very quickly, again, using that scooter rating, get in front of some of these areas of the markets that are starting to potentially turn positive. Let's go ahead, and I do want to take a look at some other areas that I do want to be sure and point out to you, and that is the fact that we are seeing really significant moves in these FANG stocks. I'm going to pull up a weekly here, and what you'll see is this is Apple. It's up 3.75%. We can take a look at Facebook, up 3%. So we are seeing nice moves. One of the most interesting to me is this move potentially into Netflix. A little too early for my work. I'm not constructive on it just yet, but this is a weekly view. It's up 3.6%. The stock this week now has broken back up above this red 10-week or 50-day simple moving average. However, we're not getting confirming outside other indicators that the stock is ready for what I call prime time. But at the very least, we're getting higher lows, and it is acting in a bullish fashion. So you like to see these big large cap FANG stocks. Microsoft's another. For those of you that are subscribers to my MEM Edge report, you'll know this is Microsoft up 4.2%. some of these better performing FANG stocks, we did highlight them and alert those subscribers to the MEM Edge report. For those of you that want to trial that report, go ahead to my website, meminvestmentresearch.com, and I have a great promotion going on, and you can take a look at that really highly performing MEM Edge report. So those are the FANG stocks. Let's take a look at some other areas that I did want to share with you as far as what occurred last week in the markets, again, with an eye toward preparing for next week. We did talk about biotechs helping the healthcare stocks. There is another area that is moving. This is up 5% this week. This is WCG. And I'll show you another way to get your arms around this kind of move. But this is a managed care stock in healthcare, gapped up on earnings. This is another phenomenon that we're seeing, another article that I wrote. It's do not ignore this chart. I did it earlier this week, and I talked about this phenomenon where these stocks are gapping up, and also pointed you toward a course that'll help you learn how to successfully trade these gaps up. Some of these names are going to just really power even higher. So again, that is in the articles area. Don't ignore this chart. But for today, let's go ahead and take a look in StockCharts.com. We are going to drill down here to sector summary, and we can see it's going to provide us with information on today's performance. We can also take a look at 1 week. We talked about healthcare. It's up 3% this week, but what are the underlying areas? Well, we already know biotech. That's something that we reviewed earlier, but also these healthcare providers. Take a look, up 3.4%, and a number of these bigger movers. Now, I talked to you about this scooter ranking. The bigger movers, and you will see this phenomenon, at this point in time, it is these lower scooter ratings. It's not the higher. What we can do from here is sort it by that ranking, and we will see some of these healthcare providers. Not all of them are going to be managed care, but certainly Humana is another one that is in that same area as WCG. These guys are actually due to report next week, next Wednesday. So keep your eye out for that, because we are seeing really vibrant earnings releases that are coming from these managed care stocks. And then, of course, also a nice response to that. This is another managed care that gapped up. CNC is the ticker symbol. Pretty much a very long downtrend that is nicely potentially being reversed. We do still have a little work to do here around this downward trending blue 200-day simple moving average. Ideally, we would like to see it decisively break up above that before we can confirm that this downtrend has in fact been reversed. So let's take a look at some other areas and items that I did want to share with you. I mentioned to you the concept of what is called failed breakouts. The reason I'm pointing this out is because there does seem to be a pretty fair number of these breakouts that are faltering a bit. Certainly as well as breakouts that are working. But when we look at failed breakouts, I'm going to show you what to be on the lookout for. So we're going to take a look at TGT. This is Target. And what I wanted to point out to you here is the fact that the stock did break out to a new high in mid-October. We are seeing this among many of these consumer discretionaries. They seem to be taking a bit of a break. But the first signal that this breakout may be failing is the fact that the price breaks below that 10-day simple moving average. Now, it doesn't mean that the failure is forever. It's just a more near-term type of item to be on the lookout for. But we can also use these other indicators to help you out. This is that MACD, moving average, convergence, divergence that I mentioned to you. So one of your first signs that the stock was getting a bit weary, if you will, is the fact that this MACD started to level off. And this is what happens when a stock is in a range-bound period, go nowhere environment. This this momentum indicator will kind of flatten in line. But we did get this black line that crossed down below the red. And I talked to you earlier about that being a signal that the uptrend momentum was shifting. Now we are still above this net neutral zero, so we could be okay here. The RSI is certainly trending back upward, but this is a failed breakout that occurred earlier. I'm going to go ahead and share a couple of other stocks with you so you can know exactly what to be on the lookout for. This is ZUMZ, Zumiez. It's another consumer discretionary stock. I talked to you about the kind of the lackluster behavior that is taking place in some of these. So here again, we do have that break below that 10-day simple moving average. We do have that black line going down through the red. Very simply, just telling you near term, the momentum has shifted. Doesn't mean you have to sell the stock, certainly. Another way that you want to always view, not always, but certainly from my work, I like to look at the weekly chart because I want to see longer term. This is the same stock. We can see that it's finding support at this upward trending 10-week or 50-day simple moving average. So we are still in good standing. Again, very just super near term kind of an indicator. One last name that we can look at on that potential failed breakout side is Kbal. And again, on the weekly, it's in very good positive standing. Nothing to be concerned about. But if we take a quick peek at the daily, we are getting a little bit of a break below the 10-day, that black line through the red. So again, for you investors that are faster in your trading, this is something to pay attention to because we can go back to the beginning of October, break below this 10-day, black line through the red. So, it's just telling you maybe over the last next week or two, you may want to put your money to work elsewhere. Again, doesn't mean that you need to sell everything. And one other area that I did want to share with you, this is a phenomenon that we are seeing quite a bit of this week. Very, very bullish. I talked about it in Don't Ignore This Chart. And that is stocks that are really having these big, significant moves. This is Hess H&E Equipment is the name of the stock. HEES is the ticker symbol. Had a big blast off here. Take a look at the volume. And what you'll see oftentimes is the stock pulls back before potentially breaking out. But all of that is covered in my course that I talk about in Don't Ignore This Chart article, where I review a number of these stocks that are just blasting out to new highs. A lot of them are gapping up. Here's another example. LAD breaks out of a nice base, big gap up, nice volume, and the stock's continuing to advance and stair step higher. So that's another bullish sign for the markets that these stocks are gapping up and having continuation moves. Here's a name that moved today, ARES. This was interesting to me because this is an asset management firm, but they also offer a 4.3% yield. And you can see that when you are looking at these stocks, you can ask to see what's called a full quote. You just simply check that off. And this yield, actually here it's showing 3.95, but it does provide you with that insight. So very, very helpful information when you get that full yield. Let's take a look. There's one other phenomenon that is occurring in the markets that I thought I would share with you so that if your stock reports very strong earnings and there's no response, we are seeing some stocks where there is a delayed response. This is Tesla. TSLA on the daily, another stock gapped up tremendously, very strong earnings, but the next day's move was equally powerful. And a lot of this is because analysts have now digested the earnings, they come in and they support the stock, move it higher. This is another stock Edwards Lifesciences, a big winner from the MEM Edge report. And here is where the company actually came out with earnings, and it actually pulled back on the news, but it wasn't until 2 days later that the stock had a significant move and is continuing its uptrend. So we are seeing that occur as well, simply because a lot of savvy investors are not buying stocks into earnings. It's too risky. They want to see those numbers reported. Once the numbers come out, they dig in, digest, then they are going to enter these stocks. So one other item.